We are now going straight into a talk by Nick Jones, who's the founder and CEO of Zumo, on decarbonising crypto, but then you will also see him join the panel following that. Please welcome to the stage Nick Jones, founder CEO of Zumo. Awesome. Really awesome. Thank you.
Hi everyone, nice to see a few familiar faces and some new ones. So I'm Nick, I'm the CEO of Zumo. We're going to talk about our kind of decarbonisation journey and implications for the broader market and why we believe it's so important to drive mass adoption, both for users, end users and for corporates. And I guess the grounding and the starting point of this is one of our values that we define at the very start of our journey. Which was that all the decisions and actions that we make benefit both people and planet, and that's kind of a really kind of core value for us as a business. And you know, you've just heard a lot of the kind of people benefits and making sure that we're really thinking about those two things holistically. So briefly on Zumo, for those of you who don't know, so we're one of the FCA's registered crypto assets businesses here in the UK. We have a wallet and exchange platform based around non-custodial wallets, which is all our own IP. And we have an app here in the UK which contains both e-money accounts, some CeFi elements, and non-custodial wallets for Bitcoin and Ether. And we also we provide that as a service to a number of other fintechs and increasingly to banks and bigger financial institutions. And this sustainability piece has been a key kind of unlock for how we're doing that. So yeah, just to cover off, I suppose the first bit is just a bit of a look at some of the myths and the truths and half-truths around crypto and this kind of broader transition to net zero that we're trying to go on as a global society. Fairly depressing COP last week with some sort of tiny steps forward and a lot of steps sideways. So this is really about owning our own impact as an industry and really trying to set the tone and show what a new industry can do and achieve without all the legacy issues and legacy invested interests of some of the older industries who are finding it significantly harder to drive this transition. We'll talk about our own decarbonisation journey, not because we're perfect or because you know, we've done the most amazing job in the world, but just to show the steps that we've been through, and hopefully that provides a bit of inspiration. But a key part of this is around collaboration, and I think that, again, back to COP, what we're not really seeing is the type of cross-industry global collaboration that we need for this to happen. So key theme today is collaborate. Love to pick up conversations and work out how we can work with other businesses, both in TradFi and in CeFi and indeed in DeFi. And then we'll talk about some of the broader solutions. Okay, so I guess in this bit we'll have a bit of a look at some of the truths and half-truths that there are surrounding the crypto space. I guess we've all been frustrated in the industry at some of the more sensationalist headlines around the energy use of Bitcoin. You know, is it using the same amount of energy as Western Europe on one hand, or as the Bitcoin maxis would say, is it the best thing since sliced bread? Should we not worry about the energy use at all because it's so much better than the oil and gas industry? And really trying to take a bit more of a balanced and more kind of grown-up approach, which is evidence-based. And so, yeah, we'll just dig into that a little bit because I think it's really important. And really what we're talking about here is, in a large way, is the difference between crypto, broadly, blockchain, and Bitcoin, and really understanding the differences between the two. And what I would say as a real positive is when we started on this journey 2 years ago, crypto was seen as having the environmental issue, the energy use issue, the carbon issue, and that's moved pretty significantly in a 2-year period to people more broadly understanding, albeit you know there's certain people in the press who don't, that we're really talking about Bitcoin and proof of work blockchains, that actually most of the others don't have the same issues with energy use. And that's quite a big change. If you think two years ago, the headlines were crypto is going to destroy the planet. Now it's a lot more nuanced. It's Bitcoin has an energy consumption issue, but actually a lot of this other stuff is really efficient. So that's not all on us, but it's part of a group. We're part of a group of companies and global initiatives that have really changed the tone of that conversation. So Things like the Crypto Climate Accord, which we were the 4th signatory of, now has over 300 signatories across the industry. Things like the Sustainable Bitcoin Protocol coming in the US, more publicly listed mining companies. There's a lot more information and there's better information that's out there, although of course we still have to read headlines in The Guardian and other papers that we don't really like. So just wanted to kind of cover that off a bit. And I suppose, yeah, you know, in a lot of ways, we're talking about Bitcoin here, and just some stats, which is why I've got these cards with me. Normally, I like to wander around on the stage, but I want to make sure I'm getting my info right today. So, 92% of carbon emissions caused by the Bitcoin blockchain have happened since 2018. So, as Bitcoin's become more widely adopted and more used, so the carbon issue becomes worse. This is all Cambridge University data, which is the best source of data if you want to look at kind of a source of truth, and if you want to look at Bitcoin data. Cambridge Centre for Alternative Finance done incredible work, and it is the kind of the gold standard for the space. Bitcoin uses the same energy globally annually as Pakistan, so not Western Europe, not whatever else, but Pakistan, and that's about 100 terawatt hours annually, which is about 0.3 to 0.5% of the world's electricity. So it's significant. And it needs to be looked at, but it's kind of, you know, on a scale of magnitude, it's a controllable issue. And one of the things we'll talk about here is the beauty of Bitcoin is the carbon emissions are just around electricity use. You know, this is not an industry with extensive supply chains. It's not being used to finance other dirty industries. There's a problem that we can tackle, and that's one of the great things about this. If we all kind of get our act together. Interestingly enough, as well, that just looking at vented gas from things like landfill sites, oil production, if we could capture the electricity from gas flowing every year, that would cover Bitcoin, and that would cover the Bitcoin electricity need 7 times over. So there's tons of opportunity here to drive for Bitcoin, as we're seeing this gradual shift of where the mining's happening to being based around renewables, and actually seeing Bitcoin as potentially a way of driving that as a positive change, of actually driving the transition. And then, yeah, the other bit I touched on, which is really that we are talking about these proof of work blockchains, and we're specifically talking about, you know, the early ones. You know, it's like, you know, the analogy of kind of comparing a Model T Ford to a Tesla. Bitcoin is the first one. You know, it happens to be the one that's the most invested in, and the most transactions are happening on. So it needs looking at. But again, there's massive amounts of innovation, and just to call out some projects that are, you know, really kind of owning their carbon footprint and really making it science-based. People like Polygon, Cardano, and most successfully, in my eyes, recently with the merge happening on ETH, where ETH energy use has dropped by 99% post-merge. So amongst other things of that incredible project, reducing energy consumption by 99% is pretty incredible. Yeah, so this is really about changing the narrative. You know, we want to change the narrative and change the perception institutionally by users around some of these truths or half-truths around Bitcoin. So the first one is that decarbonisation is, when we're talking about decarbonisation, is electricity. And the beauty about that is we know how to decarbonise electricity. There are methodologies, there's the transition to renewable power, there's renewable energy certificates, which we'll talk about, which give us this opportunity to decarbonise this space. And again, part of this change in the narrative is Bitcoin mining and Bitcoin in general can actually be used as a positive force for driving this transition, and we're starting to see that already. So just again, for a bit of context, I'm definitely not in the we're better than you camp. I don't think it's helpful, and certainly comparing, you know, Bitcoin or crypto to things like the military-industrial complex or whatever is not particularly helpful. But if you look at it compared to the financial sector, the traditional financial sector, there's 2 great reports there if you're interested in the area, one by Greenpeace, one by CDP. So bank loans globally create 700 times more emissions than banks, and that's largely because they're lending heavily into dirty carbon-emitting industries. And that the UK financial sector, excluding the cryptocurrency space, the financed emissions for the UK financial sector alone, so the City of London where we're standing, are 2 times the whole carbon footprint for the UK on an annual basis. So, you know, order of magnitude, there's significant issues in more traditional industries, and obviously if you looked at something like aerospace or oil and gas, it would probably be even more depressing. So it is important to understand the context, but it's also really important not to say, well, we're better than them, so let's just you know, we'll just sweep it under the carpet and pretend it's not there. Yeah, so I guess what have we done as a startup, and why have we done it? You know, we're still a fairly small company, you know, 50 odd staff. What have we managed to do, and why have we done it? And there's a key things to touch on there from the kind of benefits of why you should do this, apart from it being the right thing to do. Institutions massively in the UK and Europe have strong, very, very strong mandates around ESG, and you can't work with them unless you've got something sensible to say. End users, particularly younger ones, really care, and I'll show you some evidence about how users really, really care, and it's a real barrier to particularly Gen Z adoption of the space, that they have these concerns around, is it a dirty industry? Can I invest in this with a clean conscience? And the third one, from a kind of inward-looking point of view, is it's incredible for recruitment. Again, most of our staff are under 30. And it's our key differentiator in the market. It's why they want to work for us. It's why they tell us every time we interview why Zumo rather than somebody else who can probably pay them more. That they really buy into this space. So there's a number of really strong business reasons to do, and I think we're at this nice convergent point in history where the right thing to do from a business perspective is also the right thing to do kind of morally and from a kind of protecting the future benefit. So yeah, this is where we started. Which is looking at our own carbon footprint as a small organisation, which is, you know, pretty clearly, when we looked at it, it's all down to the cryptocurrencies that we offer to our customers. So tiny bits that we can deal with in terms of supply chain, travel, etc., etc. So this was our starting point of our net zero journey. Right, what's the biggest thing we have to tackle here? The thing we have to tackle is customers buying and selling cryptocurrency on our platform as an intermediary. And it's been quite a long and interesting journey, I guess, as part of this broader approach to ESG, which started off with a fantastic partnership with a small charity, Waste Aid, who do projects in emerging markets, largely to prevent the open burning of rubbish, massive source of emitted carbon into the atmosphere. We partnered with them, we still partner with them now. Fantastic close partnership, again, that our staff love. Fourth signatory of the Crypto Climate Accord. Launch of our own net zero strategy, and our first white paper really looking at trying to assess what were the truths and the half-truths around the crypto market. Then I think we are still the only crypto company to ever win Innovate UK funding to productise this decarbonisation offering that I'm going to go into. And then the publication of our second white paper, which is around the MVP that we run around this full decarbonisation piece, and then a couple of awards, and then recently just been invited to join the World Economic's Sustainable Crypto Coalition, as well as our work with GDF and GBBC, which again is part of this kind of community piece of trying to take people with us. Yeah, so just in terms of our, this is I guess shows the stages of our journey. So phase one, become carbon neutral for 1, 2 and 3. There's no excuse if you're a small organisation to not be carbon neutral for your scope 1, 2 and 3 emissions. It doesn't cost very much to get it assessed, and it's usually pretty easy for hybrid, remote first hybrid businesses to do that, which most of us are. Second one, deal with our users' interactions with cryptocurrency and the blockchain, particularly important because we're an on-chain wallet, which has felt like a pretty good decision over the last few weeks. Our users' funds are on-chain and they're interacting with the Bitcoin blockchain when they move funds around. So it's not just about the mining, significant energy use based on transactions, and it's about understanding our role and our responsibility as part of that. And then the third one is this ecosystem piece. So how do we collaborate with the ecosystem? These two white papers on our website, zumo.money/decarbonisation. First one assessing the market, and the second one really talking about what we can do as an industry to move that forward. Well worth a read if you've got an interest in the space. Yeah, and this was the MVP that we ran earlier this year over a pretty short period, about a month. About £1.5 million of Bitcoin was bought on the platform. Using the calculation that we've developed alongside Cambridge University, That's about 850 megawatt hours of electricity, which we successfully decarbonised, and we're able to say the Bitcoin bought on our platform was fully decarbonised, which is kind of a cool thing to be able to say, significantly ahead of being able to say we've offset it. You don't need to offset in our industry. We don't have a wide enough carbon footprint to offset. We can decarbonise what we're doing. And yeah, 84% of our end customers believe that sustainability in crypto is something that needs to be addressed, and whether that's reputational, real, or otherwise, that is a key blocker for mass adoption. And what I would say, and it's not on the slide, is 100% of our institutional customers, it's important to. It's the reason why we're in the room on a lot of those cases. So yeah, on to the kind of the solutions bit, and really this is about the kind of pay it forward and collaborate, and how we kind of build solutions for the community and share that data. What we've done and how we've approached this is all publicly available. It's in those white papers. The methodologies are all there. We love people to pick them up and use them, or to contact us and talk to them about how they can build them into their roadmaps. So yeah, this is what we've done. I won't get too far into the weeds on the different methodologies that are there. You can read about these on the Cambridge site and others. But we chose this network share model, which we believe is the right one for an intermediary like ourselves. If you were passing on to the end user, you would probably take this hybrid model that the South Pole research pushes you towards, which you could do, and we'll talk about how that could happen. Essentially, in this pilot, users bought Bitcoin on the app. We calculated electricity consumption. We worked with a partner to buy renewable energy certificates that were focused on clean energy projects in relevant markets. And the output is that you decarbonise the Bitcoin you have, but you're also helping drive the transition by effectively raising the price of renewable electricity for the producers without passing any additional costs on to the end users. So a really interesting mechanism, not without its difficulties to execute, mainly because the REC marketplace is pretty difficult to navigate. And I guess the other thing to note here, and the beauty about obviously the space that we're in, is transparency. So this impact, and one of the things that most industries struggle with, is how do you verify impact that you're having? Well, obviously the beauty about Bitcoin blockchain is the data's there. It's all there. The megawatt hours that are being used are all there. Transaction volume is there. It's all there for everybody to see. So this is something where you can actually, as an industry, again, create measurable impact. So just briefly, renewable energy certificates, this market instrument, which equals 1 REC equals 1 megawatt hour of electricity, and they compensate for consumption. So from a carbon accounting point of view, if any of you do that, if you do an offset, you basically have your energy use here, and the offset sits in a column over here. If you buy RECs and it's just electricity, it just subtracts it from your main column. So from a reporting point of view, if you're a bank, it's significantly better to be able to say you've decarbonised something than that you've bought an offset. Not knocking offsets, they have their space in certain industries, but it's not appropriate for this space, we believe. So yeah, we can say that all Bitcoin bought on our platform is decarbonised, and we can help our institutional clients do that. We were also able to tailor that. So we have a banking partner who has a green finance mandate in a particular geography of the world. We focused buying the renewable energy certificates on that particular geography, so focused on driving transition in that particular market. Again, so there's a lot of flexibility about how this is delivered. And this whole point here is that it's a really strong market signal, and particularly as institutions get involved in the space, it's a really strong market signal to drive the transition. So yeah, so where we're headed, and the brief plug for ourselves is that where we'll end up with this Innovate UK work at the moment is for, as you'll be unsurprised to know, for the RECs to be put on chain and sharded. So you'll be able to buy fractional parts of a REC and be able to buy them in real time against your carbon usage. So a nice reporting platform that shows transparently, calculates energy use, and allows a variety of different ways to buy those renewable energy certificates against it, either in bulk, as you would do with something like an ETF at the end of every month, or if you wanted to, you could be buying them on a continuous basis, and you could if you wanted to, as a business, surface that to the user and allow a user to also take ownership of the carbon footprint that they're creating. So we think that's really key, and that flexibility is great. You also can potentially get this compounding effect, wherever you have the miners are buying RECs, the intermediaries are buying RECs, and the end users are buying RECs. You get a compound net positive effect. You're actually kind of buying more renewable electricity than that's actually being used by Bitcoin, which again is really key about sending these market signals about us kind of owning this space. Yeah, I'm going to run over slightly, but I'm not sure that's all right, is it? So yeah, just briefly, I guess the key takeaways on this stuff is it's not perfect. There's a lot of variables, things move around. We don't know. The Bitcoin price obviously dictates things like dictates the amount of energy that's used, dictates mining debt. Also, the price of renewable energy varies. So this at the moment. The point being that Bitcoin does use lots of electricity, a lot comparatively for its size, but it can be decarbonised, and it can also be a force for good. And we've got this really unique opportunity as an industry to help to make this work better. So for us, putting these RECs on chain, making them really verified, understanding the projects that they're being bought against really well, to make sure that it's not being, they're not being subverted, and sharding them. That's a great example of innovation and how we can use technology to improve this marketplace, make the instrument work better, and help give consumers, ourselves, our staff, and our institutional customers confidence that this is an industry which understands its carbon footprint, is serious, and aligns with their kind of values, with their broader values. And the bottom one is, look, again, to bang the drum on this, is just on collaboration. This only happens through initiatives like GDF, through GDF's Sustainable Blockchain piece, through the World Economic Forum, through the Crypto Climate Accord, through us all collaborating and working together. So I think that's the way forward. That's how we show a kind of unified front as an industry. And yeah, I guess just before I wrap up, again, if anybody is interested in the space, 2 years ago, the literature and the data available was really crap. There's no other word for it. It was just useless. It was a lot of really half-baked opinions on blogs, tweets. We were really into the weeds of some real rubbish. And there's now some really fantastic research out there. So if you are interested, direct you towards GDF, GBBC's work. Amazing bit of research by South Pole, and also the carbon accounting work that's been done by the Crypto Climate Accord, of which we played quite a big part, and 2 final plugs for our white papers, which I'd move you towards. And that is me. I'm out of time. We'd love to chat to anybody that's here today around collaborating and helping move this conversation forward. Thank you.
Thank you very much, Nick Jones. Nick, if you leave the stage, you'll be invited back on. So you will get a chance to ask questions of Nick shortly. Actually, I should go here. It's more helpful if I speak to you from here, so that you don't get the feedback from the speakers. So we're going to move straight on to ESG, climate and crypto. The moderator of this is the highly remarkable Kate Boscherell. Did you know she's an author, speaker, blockchain consultant? But did you know that she's written sci-fi books, set a little bit into the future about crypto? You should check her out on Amazon. They're pretty awesome. What people probably don't know is she's a 3rd Dan in black belt in karate. Don't mess with Kate. Please welcome Kate Boscherell to the stage.
That's always a good one to have when you've got 6 people on a panel and you need to keep them all in order. It is absolutely lovely to be here. This panel is not about mining. I think Nick has very clearly outlined what the challenges are for the perception of crypto, and the challenges that we admit we have with proof of work, and the impression that gives often the general public, that they see that as an objection straight away to anything that involves crypto. We are not talking about that. We are spreading out into the real world, which I think resonates with a number of the panels already this morning, that we need to stop navel gazing and look at the wider economy. And so what we're going to talk about in this panel is the fundamentals of ESG and how blockchain and crypto are being used in the battle to mitigate climate impact in multiple areas. So we have some fantastic panelists who will introduce a jigsaw of key elements in the real world that are using blockchain and crypto to mitigate impact. We'll be looking at carbon credits, we'll be looking at biodiversity, at keystone species, at the circular economy, at individuals and infrastructure, and the global north, global south disparity. So I'd like to welcome all 6 of you to the stage. Come on up. I'll squeeze over here. It's getting quite crowded up here. My goodness. Okay, what we should do, I think, is start off with introductions. Where should we start? We shall start at the far end and work our way down.
Sure, hi. Thanks, Kate, and good morning. Just checking my watch to make sure it is still morning. Everyone, my name's Ed, and I run a multi-strategy hedge fund called Calligraphy Digital.
I think Nick we already know. Waleed.
Hi, my name is Waleed Al-Sakaf. I'm the CEO and co-founder of Rebalance Earth, and I can't wait to tell you about its story.
Hi there, I'm Duncan Murray, and I'm the founder of Aniseed.
I'm Adrian Rimmer. I'm Director of Sustainable Finance at London Stock Exchange and a co-founder of Just Carbon.
Good morning all, my name is Ryan Lavelle and I am the co-founder and CEO of Empower, and we are democratizing the clean tech revolution.
Fantastic. Starting off with, I guess, the latest news. Duncan, you've just come back from COP27. Could you share any particular insights that are really exercising you at the moment?
Well, I won't talk about the logistics side of it, which were interesting. I think my takeaways from COP27 in general were, as soon as I walked into the Blue Zone, it struck me how everyone was individually talking about the same thing, what they were doing, you know, how they were saving forests. And the other thing that struck me very prominently was the theme all the way through on carbon. Primarily the voluntary carbon market, carbon forwards, carbon financing, carbon credits, carbon markets. And Aniseed and we believe strongly that biodiversity is important. It was obviously a theme of COP, and critically also water. Water was a very niche part of the climate discussions, I thought, in COP. But probably, in my opinion and opinion of some others, the most urgent issue we face. You know, several large cities are facing day zero in June or July. The whole of Central Asia relies on the Central Asian glacier. When that's gone, over 1 billion people effectively don't have access to fresh water. And over 60% of the water we use now for food production globally is being contaminated. So for me, carbon is obviously important. Aniseed's been carbon negative since we were incepted, but biodiversity, you know, the removal of apex predators from both the ocean and the land is causing significant damage, and also the water crisis, which I think is not, it was only squeezed into one of the SDGs. They had to fight for water to actually be on there at all. And if anything, it's the thing that will cause the most damage. So those are my takeaways. We can talk about the logistics of COP afterwards.
The water aspect is interesting. I think there are 2 things that occur to me here. The idea that hydroelectric power is a positive way to mine. I know we said we weren't going to talk about mining, but that is a particularly interesting one around biodiversity. And I think we talked about the water table issues with coal-fired power as well.
Yeah, I mean, one of the examples given at COP was Mongolia, that effectively has had, was traditionally, as everyone knows, a very green steppe. You know, Genghis Khan used it to feed all his horses. Probably not a good example, actually, because he did terrorize the planet. But it was very green and grassy, but the whole of Mongolia now has had 6 of the largest coal power stations built next to each other, and that has sucked up the entire water table of the area, and that entire area now of Mongolia is a desert.
That's absolutely horrifying. You mentioned apex predators, and certainly the species, the key species in our global biodiversity merit particular attention. And I know, Walid, this is your area of expertise.
Yes, so let me tell you guys a little story. How many of you guys like elephants? Raise your hands. Okay, so I'm going to talk right now about forest elephants, which according to the IMF are worth $40,000 dead for their ivory. But they're worth $2.6 million alive for the carbon sequestration services they perform in the forest. We have a market for a dead elephant, i.e. a dead nature. We do not have a market for a living elephant or a living nature. Why is this important? If you take the Congo tropical rainforest, the second largest rainforest in the world, if you lose the forest elephant, which are the gardeners of the rainforest, this is what's going to happen. The eastern part of the forest loses its humidity and stops providing rainwater into the Nile River. The western part of the rainforest loses its humidity and stops providing drinking water for the whole Sahel region. This creates 130 to 150 million people facing water insecurity and mass migration. And God knows we get scared when we hear that word. So the point of this, everything is interconnected. The forest elephant to the forest, to the carbon sequestration, to the local communities, to social upheaval. So what we at Rebalance do is that we monetize the ecosystem services provided by keystone species such as forest elephants. Because by purchasing the service, it's like that elephant is your biodiversity stroke carbon contractor that any corporate can employ. It's only by linking keystone species to the market that you can protect them and you can start rewilding them across the world.
Thank you. Nick, do you think that you'll be investing in elephants anytime soon?
It's a great kind of donut economics example, though. It's, I think that's got to be the way where we place value, rather than just pure, monetary or kind of narrow growth-based value without acknowledging the part that there's tons of examples. There's tons of that's a brilliant example of exactly where we should be attributing value globally. So. Yeah, I would invest.
Fantastic. In terms of the community and the human aspect, Ryan, the importance of the individual and the community can't be underestimated.
Absolutely. So I think one of the panelists talked about the water crisis. I think that's a really, really hot topic. Power's been focused very much on community level carbon projects for 2-3 years now, and we can't solve these issues without first working at the society level, the human level, and this is where I think the blockchain and tokenomics, behavioral economics come together. If we can bring clean technology and incentives to motivate communities to change behavior with the right infrastructure around them. It's not a charity thing, it's a transformational behavioral thing. And there's huge opportunities now, I think, with the alignment we see with the Paris Accord. There's a major structural changes in the financial system. There's a lot of capital available to regenerate communities if it's deployed correctly, and if we have the right monitoring, the right infrastructure. So yeah, we're trying to bring all that together in the world's, I guess, first carbon negative end-to-end ecosystem that is focused on the human and their place in this value chain.
Thank you. Ed, in terms of the participation of people in the circular economy, how are crypto and blockchain helping this to be realized?
Yeah, this one of the key pillars of the circular economy is about recovering value. And at the moment, we're pretty good on the kind of producing stuff side of things. We're not so good on the kind of consuming and sort of afterlife of value that we have in society. You know, this is in a world where we're sort of able to smash a satellite into a moving meteorite at 14,000 miles an hour, but we're still producing 600 million tons of food waste every year. And, you know, we're still, things are just not very efficient from a reuse perspective. I mean, we send 68,000 containers worth of plastic from the US to emerging market economies every year. So something's not quite right there, and it's really because we've sort of nailed the B2C, the business to consumer, and the business to business side of things, but we haven't really sorted out the consumer to business and the consumer to consumer side of things, and that's really about data. We're willing to buy something from Apple because we trust them. They've got reviews, they've got a website URL that we can check, they've got a brand. It's just a whole bunch of data points that enable us to consume value from Apple. The reason you won't buy a phone from me is because you don't know me. You don't know the provenance of my phone. You don't know how old it is, and so on and so forth. And it's very difficult to create data points around individuals and between individuals. And that's really what blockchain's about. I mean, blockchain is about immutability, trustlessness, and transparency. And those three things really create the ability for us to transfer data between one another with trust. So that's where this whole blockchain space, for me, when it comes to circular economy, is going. It's going to enable us to effectively be paid for recycling. I mean, there's no reason why you shouldn't. Your recycling has value, and there's no reason why you shouldn't be paid for that. It's going to also enable us to, effectively be paid for low carbon lifestyles. I mean, the fact that someone chooses to be a vegetarian and someone doesn't has value to the world. If you're able to trust that person, you're able to create the data, create a data profile for them on blockchain. Then there's no reason why they shouldn't have value for that behavior. And that will go through to the whole world in terms of valuing the world's assets. I mean, there is not a single environmental charity in the top 40 supported charities in the UK. So we'd prefer to support cats and dogs in Battersea than we would to help with the environment. And the reason for that is that it's very difficult for us to value the world's assets, and it comes back to what Walid was saying earlier about, there are ways and means of blockchain providing that trust and that provenance that will enable us to do that more efficiently.
Yes, indeed. I mean, Adrian, I mean, this is almost going beyond carbon credits because it is behaviour credits. Can you explain more about where you sit in this?
Yeah, so, I mean, it's interesting. So carbon credits really were the first digital asset. So they've always existed electronically. It's basically a proof that a ton of carbon was removed or reduced from being emitted to the atmosphere. So, but the process was far from digital and still is. It is a very complicated process. I used to run Gold Standard, one of the certification bodies in this market. And it is a very complex human process of implementing projects with a huge data trail and in-field auditing, etc. And that's one of the reasons that this is a market that still lacks trust. It's delivered a huge amount of money into climate action, but it has not really gained the confidence, certainly of the retail community, but actually even within the corporate world. And that's because a lot of the data that exists is quite hard to get hold of. And to the point that was made earlier, the proof points. And where crypto can come into this is to actually provide an immutable trail of the evidence that what we're saying has taken place, when it did it, and how it was done. And that will help provide confidence and evidence of the way that activities are undertaken in a quality way. But it also helps us transact. So again, carbon credits are a horrible market to buy from. I mean, really, it's like it was designed to be difficult. And I say this as someone who's been involved in this market for a long time. So what we're doing is looking at how can you make it simple for buyers of carbon credits to understand that they're getting what you're selling them, and that it is high quality and that it fits a particular type of profile. So where my team and I built a methodology for what does a high quality carbon credit look like. It's the key standards bodies. It's been issued within a recent time frame because it's using the latest carbon accounting methodologies. It's following a certain way of achieving that carbon credit outcome, and then aggregating those and tokenizing them in a way that they're easy to access, both in terms of understanding what's gone into it and seeing an audit trail behind it, but also in terms of being able to buy and procure in a simple fashion, not through sort of OTC brokerage models that really have no transparency at all.
Duncan, you're nodding away there.
Well, I was just going to say that the technology also allows for the first time for the retail market, as well as engagement, the gamification of it. And, as you mentioned, there's no reason why you can't collect certain nature-based assets. You can't get rewarded for certain behaviors. And prior to, a few years ago, that wasn't possible. I mean, the retail market's been very detached from the carbon market. You can't buy a carbon credit, for example, if you're average person on the street. Even small companies can't. So the gamification that everyone's undergoing, not just in environmental space, and everything is now leveling up, sharing with your friends, getting to collect trees or trophies and so on. Or in this case, it would be trees and animals. But the technology now allows that, whereas previously it didn't. And I strongly believe that that's the key to engaging, the retail market, which has been largely, just circumvented from the whole environmental conversation.
I know, Waleed, with Rebalance, how do you find the gaining the confidence of enterprise?
So you got many different kinds of enterprises. I mean, for example, our partners are at EY, R3, Simmons & Simmons, and a bunch of others. And what we find is that a lot of the companies, and to some degrees consumers, they're looking for not just the numbers about carbon credits they're going to get, but they're looking for stories. Stories that they can sell to their shareholders, to their customers, to their whole value chain. And unfortunately, if you say, here's a metric ton of carbon, it's hard to sell a story about it. So for example, if we were working with British Airways and you were taking a flight from London to New York, you can offset your flight by buying a metric ton of carbon. That means nothing to most people. You can support a tropical rainforest. Yeah, that sounds pretty good. Or you can get Rosie the elephant to offset your flight, because here's a video of her doing it on yesterday's flight, and that video comes straight from the camera trap. You get that QR code, you land, and you've got that video of Rosie the elephant. You see where the value of that token for the purchase of that credit that Rosie produced has gone to pay the park ranger's salary, to provide free healthcare to the communities, to provide education, and also to invest in women for them to set up their own small businesses. Because there's a direct correlation between the health of a society and the educational and financial empowerment of women. All that is wrapped up in a story through Rosie the elephant. So what we find, and at least through the corporates who are buying our credits for the pilot that's upcoming, is that they want tangible stories that are science-based, that have the data to back it up, and have a technological infrastructure that can enable the tracing, the traceability, the transparency, and the trust. It's an entire package.
So it's engaging people with story, engaging that sustainable consumer that you spoke about, Nick, the 84% of people who want the sustainability to be tackled. Is this kind of storytelling and inspiration in the carbon credits and the diversity credits key to that?
Yeah, I think from our, just speaking to our own kind of MVP and how we've run that, I think that absolutely right. You need to have these kind of tiers of information from the high level, and let's engage people with and make it as interesting and relevant to them as possible. And then, like with any kind of short and long form content, you need to be able to, the people that want to go right into the weeds and look at the science and go and delve and read all 55 pages of the white paper, then that's great. That has to be there as well. But yeah, look, we have a predominantly Gen Z user base on our app, and engaging and allowing people to feel ownership of what they're doing is the key thing. So on our MVP, it was pretty quick and dirty. Users just got an email with the details of the wreck that they bought, where it was, and the feedback was incredible. That people had got this really really nicely worded and written email, but just an email telling them what had happened from their purchase of that Bitcoin, what had happened in the background. Where you want to get to, obviously, is to have a dashboard where a user can actually see that through, you know, what's happened when they bought Bitcoin and when they've moved it around on chain somewhere. What's that achieved, and engaging people and taking them through is, I guess, that it's to your point as well. It's that whole people understanding the kind of end-to-end journey of what they're consuming and engaging people in that way. So storytelling, 100%, transparency for users, engaging content, usability. All of this stuff, which isn't necessarily blockchain's forte. So that's the challenge. You know, that's the challenge that we've all got to solve.
But I mean, the blockchain is the infrastructure that enables that transparency.
100%. Yeah, absolutely. Yeah. It's just about understanding there'll always have to be a presentation there that makes it interesting for people, for most people, over and above us lot.
Adrian, you're jumping in there.
I was going to say that I think what's really interesting about this is it's absolutely correct that people want stories and they want to engage with what is actually happening on the ground. And carbon projects have huge social impact and biodiversity benefits alongside them. But it's really hard to sell it on that basis, to create a large market on that basis, rather, because then everything's a bespoke sale. The beauty of bringing blockchain to this market is you can sort of do both. You can create a commodity around high-quality carbon, but you can track every detail of that story so that you can engage your audience in a very specific way and do it with confidence. So in the background, you can build a scalable, traded global market in carbon where the ton of carbon is really the key thing, because ultimately that's about reducing climate change or addressing climate change. But in order to get a price that's meaningful, you need to tell the story. So I think that for me is why this is a really exciting sector to be operating in, because it just bridges those two worlds.
It's that story. I'd like to look a little more into the infrastructure side and the global north, global south disparities. And I know, Ryan, you have things to say on that score.
Yeah, I think we're hearing some really fantastic comments and remarks from the panel. I'd like to thank them all for their remarks. But we have to remember that, especially when looking at Africa and other parts of the emerging markets, the sort of the parts of the world that are suffering some of the worst effects of the climate change disaster are the ones that least responsible for causing it. And this is really the motivation behind what we're trying to do in Power, which is really to rebalance the whole equation and bring the power of the carbon and the financial capital markets into deploying infrastructure and capital at scale into the global south, with the focus on the real underlying economic social needs of these communities. I mean, we can lament climate change and carbon and these topics as much as we like, but when you're going into communities that don't have electricity, that don't have basic needs and water, it's very difficult to engage. So we're taking things at the basic level. What are the needs of these communities in terms of getting their economy up to a scale they can operate? Then we can, as a byproduct of that, address the decarbonisation challenges and introduce all the great technologies that we're talking about. So we're heavily focused on, let's say, low-hanging fruit, building momentum around bringing people into the digital space with these great technologies and blockchains, using technology, clean technology in particular, as a driver for community engagement and mass mobilization.
That's what we need, isn't it, Ed? Just thinking around the mobilization of the circular economy, how are blockchain and crypto technologies in particular helping that adoption at scale and that trust at scale?
Well, I think it's the global nature of blockchain and that combination of value transfer in a trustless and fully trusted way that really is going to hopefully equalize things up. I mean, one of the investments that we're making is in a company called Open Forest Protocol that's developed some smartphone software that enables forest owners to effectively map out their land that has forests on it, take photos of the trees, upload the type of tree that they are, and that all goes into the blockchain. And that information is then effectively validated by tree experts around the world globally. So you can start to see how the blockchain is able to take massive amounts of data, verify and store it, and from that you're able to mint carbon credits directly onto the blockchain and distribute them. And therefore distribute value, dollar value, to people that need it most. And it's that sort of approach to transferring value around the world. I mean, there are enough trees in the world that are sequestering carbon, and there are enough companies in the world that are producing carbon that just needs to be balanced off, and the technology is there to do that, so long as it's adopted globally and is done properly. So I think that's sort of what the area that we're most interested in, and certainly from a circular economy perspective, that's the renewable energy and resource part, which is important.
So we have the sequestration, the open forest, the sequestration of carbon through trees. We have the biodiversity and the preservation of keystone species. We have the infrastructure building there. So there are plenty of opportunities to improve our carbon credentials. Nick, how do you go about measuring your impact in the first place?
That's a good question. From a kind of an overall impact point of view. I mean, I guess historical impact is easy to measure, right? So for us, we can look at all the transactions that have ever happened on Bitcoin, and I guess historically on ETH pre-merge. And we can work out exactly what the kind of the electricity debt has been on our platform over the time that's existed, and we can do that for our partners as well. So we know historically what that's been, and we can obviously forecast forwards to some. Probably not that easy at the moment, but with some degree of certainty around what that might look like. And it's a pretty that is a relatively that as a kind of discrete bit of data, obviously that's relatively easy to work with. Now we've got this calc signed off, it's there, it's ready to use, it's transparent. You can't hide from the transactions on the blockchain, as we've all said. It's all there, it's transparent, so you can, I guess you can calculate your impact by doing that, and then by making sure that we're doing what we say we're going to do, buying the renewable energy certificates against that. And then over the long term, it's about making sure that that's not being done. It's the Rex marketplace is another extremely clunky and one full of pitfalls. I mean, you can buy, again, you can go out and buy, spend $2 on a Rec in a market where it's totally irrelevant, where it's not going to achieve anything, and it's just another kind of bit of greenwashing to go with all the other ways you can do greenwashing. Or you can work with a partner and be really, really granular about where you're purchasing that. Is it actually helping drive transition? Is it focused on either where mining's taking place or where there is genuine opportunity to move from something dirty to something clean? So for us, impact overall as an industry will be, is this thesis around driving the transition actually working? Is it a force for good? Is it changing behaviours and changing where mining's happening? And are more companies like us adopting this share of network methodology? So that will be longer term how we measure impact.
Duncan and Adrian, you were both nodding away there. Who wants to jump in?
Yeah, the Rex market is similar to carbon credits. If you don't know what you're buying, you could be making no difference at all. And so I think this is where coming up with clear, transparent definitions of what quality looks like, what impact looks like, and what driving change looks like is really important. And so, but again, the challenge with that is you end up with bespoke contracts all the time, and this is again, comes back to the same point. But this is where through having clear trails of evidence, clear methodologies, and tokenizing a like type of high quality asset, we can really bring some value to the market.
How do we deal with that fragmentation? Because I would love to engage with all of your projects, but there's going to be different routes in. Duncan, perhaps, in terms of the fragmentation and the global approach, how do we reconcile that?
Well, it's a very broad question in general.
It is.
Just in general, the blockchain space, I mean, I've been in it since about 2015. It's been incredibly fragmented. In fact, in my opinion, that's one of the, or has been one of the primary reasons for lack of adoption. I mean, it's very confusing, too many chains, too many layer ones, now we've got layer twos, too many wallets, there's hacks, there's, private keys, which frankly people don't want. So it's always been very fragmented. I think we're beginning to see certain bodies come around in the blockchain space. I personally think, communities like the crypto AM communities are some of the strongest I've seen. There are various bodies now coming up. I think it's crucial that these bodies apply pressure upwards, though, to governments, because to the point earlier, the communities suffering most now from climate change are the ones that effectively are asking to get paid fairly for preserving their remaining ecosystems, which, if we're being totally honest, Europeans destroyed ours a long time ago, and they're only doing what we did 200 years ago. And this point was made very strongly by the Congo government at COP. They want to be paid fairly. They have forests. And if you look at the, COP, a week before COP, there was an election in Brazil that, had that gone the wrong way, would have rendered COP useless, because they would have cut down the world's biggest remaining rainforest. So it really, all of this, the technology used, and it's now there, the infrastructure. It's not just blockchain. I think there's other. As someone mentioned in one of the panels before, it's absolutely vital that AI and big data are used in conjunction with blockchain. Blockchain is very good. During the ICO boom, people were calling blockchain the savior for everything. It definitely is not that. You need to combine everything from circular economy. But I think there are still, in my opinion, far too many layer one chains and ecosystems. But I think slowly I've seen lots of, some of them being already mentioned, lots of forums, lots of communities that I think need to help drive and make both corporations and government level aware of what can be done. Because Web3 was quite underrepresented, I thought, at COP. There were various discussions about it, but I think it's about getting the right people to understand what actually can now be done. What you can have DMRV versus MRV, remote sensing, satellite imagery, LiDAR technology. All of these things can go towards making it a lot more transparent, more engaging, and that needs to just be messaged upwards. The right people need to know about that, because a lot of these, a lot of the conversations are still about traditional carbon credits, but we can do
so much more broad.
So much more. But I think your point about fragmentation, it is still very fragmented. Even now, you've got ESG ecosystems on Hedera, Celo, Cardano, and they're doing their own thing. You've got KlimaDAO doing some, things. So I think it's very fragmented. You're always going to have bad actors. But what I saw very strongly at COP was a real desire from people to now, been talking about this for 15 years. It's now getting to the point where we have to do something. So I saw a real desire to collaborate. And I think it's about getting the right people in the room. And frankly, for Web3 to come together more, it is too disjointed, and I think it really needs to get together to get the powers that be. Because there is, to the point earlier, there is the money there. There is the money there. There is the desire. It just needs to go upwards.
So as a final question to all of you, one at a time, what is the one thing that we can do, and how can we engage with what you are doing? I'll start with you, Ryan.
It's a tough question. I think more of these sort of events really helps public awareness. It's a very complex field. There is a lot of innovation going on. Not a lot of it is totally transparent what the opportunities are. So, public awareness. There's a lot of innovators, a lot of people like myself struggling along, doing things heroically in the dark. We need the support. We need investment. We need backing of industry forums and platforms to get it out there and get people to participate in the wider retail space.
And how can we engage with Empower?
Well, we're online like all platforms. We're still fairly early stage. There's been a lot of incubation and background work. But look us up online. Come join our community, get involved. There's a lot of great things happening on the ground in Africa. So we invite everyone to come and see.
Fantastic. Thank you, Adrian.
Yeah, I certainly agree. I think there's a need to bring together the kind of analog and digital worlds more explicitly. One of the things we're doing with my London Stock Exchange hat on is we've just launched a funds market for carbon funds. Now, one of the things we're looking at as part of that innovation, you can issue a carbon credit as a dividend in specie, but it makes it incredibly hard still to actually access that for the retail investor audience. So digitizing the assets is going to be a really important aspect of it. We need to bring together the community to make sure that can happen, but also to look at digitizing specific impacts that go along with those that might actually, other investors might want, impact investors might want to simply focus on the biodiversity impact or the social impact. Mm-hmm. And we'd love to have a conversation about that. In terms of just carbon, again, we very much open to discussions. We've got a really interesting founding team combining deep carbon markets expertise, UN World Food Programme, the crypto specialists, and impact finance. So again, we're very keen to kind of, rather than everyone go off doing lots of different things in their own way, to actually aggregate what's going on and work collaboratively.
Fantastic. Duncan?
Yeah, but I was going to use the word awareness, so that was stolen from me by the first answer. But I think as an industry, I would say the thing that Web3 needs to do is focus far more on what it actually does than how it works. Because there's been, ever since the ICO, STO, NFT booms, it's all about, how many TPS can we do? What is an NFT? I mean, an NFT was probably the worst marketing campaign ever. It's a very, very good piece of technology that has a myriad of great applications. But it was called an NFT, and when they started talking about non-fungible token, I mean, it's a crazy word for something incredibly good. So I think we should just focus on what the technology can do, rather than how it works.
Thank you. Waleed?
I love to be controversial. I would say, of all the conversations we have, we spend maybe 5% of our time talking about tech. This is an echo chamber, and we need to remember this. You need to go out and speak human. Don't speak tech, don't speak NFT, don't speak protocol. Talk about what you can offer, understand the problem, and understand how you can translate your capabilities into solving those problems. But do not start with tech.
Fantastic. I'm going to jump and go to Ed.
So I would say the most important thing we can do is to embrace change and innovation. There's a lot of new technology coming down the pipe, which is going to enable us to change our consumer ways and to do things differently. There's lots of recycle markets now. There's Olio, which is although this isn't directly related to blockchain, but I think my point, there's a lot of tech coming down the pipe, which might seem strange at first. It might be a little bit difficult to kind of get your head around. You might need to ask someone to help you kind of set up an account or work out how it works. But the more people that adopt this stuff, that's going to eventually help us to change the way that we've been consuming, the better. And if we can build momentum behind adopting these new technologies, then that's how we're going to sort.
And how can we engage with your work? Where do we find you?
You don't need to. Just crack on.
Fair enough. And Nick?
So how can you engage with Zumo on this stuff?
Yes.
So there's a ton of published material, both pretty high level and pretty detailed that's out there to read. We also do a really excellent podcast series, which I think you might have been on, Kate, actually, around crypto confidence, which again is around telling stories and making and talking about outcomes and really trying to remove barriers. And we talk a lot about this broader ESG piece. Not just for us. The E in ESG is an important pillar that goes alongside social good and very, 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 very importantly for our industry at the moment, governance as a key element. So we see all those. There's loads of content. We're happy to talk to people, and for other businesses, again, let us know how we can help on the journey.
Fantastic. Thank you so much to all of you. That was incredible number of insights. And yes, big hand.